Welcome back. The financial focus of the week is how will Tuesday's midterm election impact your stock investments? Certified financial planner Paul Fain joins us now with an update on what's likely to happen to your money. Paul, as always, thank you for being here.
Good morning, Sean. Well, you know what the analysts are saying is that the Democrats will win the House, the Republicans will keep the Senate. So the market pundits say that that could bode for modestly bullish results for the stock market. So with a Republican in the White House, with the Republicans ahead of the Senate, that's going to how does that affect regulatory trajectory or government spending? So you start to think about support to drug stocks, defense stocks. But with a divided House, that creates somewhat of a stalemate because it's harder to get your initiatives, your policies through. And folks may not believe this, but the stock market's actually done pretty well when there's been a stalemate.
Interesting stuff, but do we overestimate kind of how politics affect money? Because in my mind, I'm like, oh man, this could be big. But really, do we overestimate that a lot?
Well, I think we really do, because if you look over the last decade, we've had both a Democratic and Republican White House. Stock market's almost tripled during this time period. So really what we need to pay attention to is how companies are doing, because we're investing in companies. In fact, ironically, the market is often referred to as a fantastic voting machine. So this coming week, there's going to be a wave of third quarter earnings report coming out, and companies will report that they've done well or done poorly, and investors will vote, and those prices will go up or down. Interesting that in 18 of the last 18 midterm elections, the stock market's gone up from the end of October to the end of December.
Oh, wow.
18 out of 18 times.
So, that's something you have to take into account, right? I mean, not always, but basically history's going to hopefully
it's a great
itself.
teacher.
Yeah.
Right.
So,
right.
Is that kind of what you're advising clients at this point?
Yeah, I think a lot of folks are worried right now about the uncertainty of the House swinging over to the other party and, movement to impeach the president. Well, markets hate uncertainty. Let's call a duck a duck.
That's true.
Markets hate uncertainty. However, one chamber could vote to impeach, the other chamber could vote not to, and so you have kind of a Bill Clinton scenario where part of government's impeached the president, but he's not kicked out of office. So, macro shocks tend to, the market tends to rebound quickly from macro shocks. Think about the 2016 election. That was a big shock. A lot of folks thought the market was going to tank, and it rocketed up. Britain, when they decided to exit from the Eurozone, the market hated that uncertainty. It was losing ground, and then went back pretty quickly.
Yeah, interesting stuff. Well, Paul, as always, thank you so much for being here today.
You bet.
Learn a little something new as always. So, guys,